Hi, my name is Pop. I'm making a video tutorial showing a spreadsheet that can help you make the decision whether or not to purchase a used business, or even if you want to buy the business at all based upon the figures that come out of the spreadsheet. When you approach a guy who is trying to sell a used business, quite often that business is not doing well, or perhaps it's an inherited business that somebody doesn't want, or maybe a spouse died. You'll have to dig deep and see whether or not the business is worth buying at the figure that they're asking. If you put down every bit of information that you can possibly lay hands on and put it on a spreadsheet, it will help you make a good decision. The man may try to generalize the figures, but you're going to have to hold his feet to a fire and ask him to provide you with several years worth of records. And if they don't have those records, you shouldn't even buy the business. If the records show wild fluctuations, you're going to have to see whether or not the information is truthful. You'll need to be able to go in and look at every month's electricity for say 3 years, every month's insurance for 3 years, every utility bill, every phone bill, all of the items that he purchased from all of his vendors and all of his payroll. Every detail needs to go on a line, and it seems like it's a long job, but really all you got to do is go in there and add everything that he gives you plus all the stuff he left out. Let's say pretty much average his business is making $350,000 a year, and you put that in, and then you're going to pay yourself and you're going to be paying the men. But in addition to that, you're going to subtract every single thing that costs you money. If it is a franchise, you're going to have a franchise fee, national advertising fee, and you're going to have all of your total fixed costs added up. There's a lease. In blue here, I've got in the column where it is supposed to go how much in a lease. It's going to be so much a month, so I put that in on the monthly column. But you've got annual taxes, so I put that in on an annual column. Then you've got things that are paid weekly, things that are paid daily, and you can see all of it worked out: yearly, quarterly, monthly, weekly, and daily. Some of the things you're going to forget to put in, but don't. Go in there and figure out every single item that you spend money on during the course of a year. And that would be your cycle to look at. Some things you only pay once a year. Other times you're going to be paying quarterly. Quite often there's things that are paid monthly, and sometimes just once in a while, but there's going to be an average annual figure for those items. Workman's comp, building insurance, personal liability insurance, dumpster permit, trash pickup, building maintenance, common area maintenance. Now that's not the same thing as rent, and quite often they'll leave that out, but heck, that's money that you're spending. How much a month do you pay for trash? How much a month do you pay for everything? You're going to have a city garage permit if it's a garage, a sign permit, a compressed gas permit if it's a garage, hazardous materials and so forth permit. Ka-ching, ka-ching, ka-ching. Every time you get a little check mark on somebody's clipboard, the city's going to nail you for that. Now you can put down stuff like child care. You might have $20,000 a year for your child care, and you can deduct that as pre-tax dollars. It depends on which accountant you've got and how close you want to get to the very limits of the IRS legalities, but yes, you can do that if you provide it for every employee. Your car gas, your car, heck, all of your family cars usually, your car's insurance and everything. Your big costs, it's going to vary from company to company what you're doing. However, payroll's going to be a biggie. Here I've got 4 employees, and here's yourself, and you're going to be paying yourself as little as you possibly can, because most of your income is not going to be your salary, because you got to pay income taxes on that salary. Most of what you're paying yourself is not, quote, paying yourself. It's pre-tax dollars, stuff that you get because you're the business owner. And you're going to be charging yourself rent on your house to use a room in your house. Anything you can throw in there that's legal, you should take advantage of, because that's one of the big benefits of owning a business. And what's legal and what's not legal changes from year to year, and it also depends on how clever your accountant is and whether or not he's an educated person or whether he's an idiot. If you've got an idiot for an accountant, get rid of the guy. Go find somebody else who knows what he's doing. Now look at here. You've got 4 employees and they're all getting $10 a piece. And that includes yourself. You're going to be paying yourself. And here you're selling $350,000 a year, and in addition to your salary, the business is making $35,000 a year. But if you can do it, if you can swing it, if you can get rid of one of those employees, let me put him down here to 0. Heck, let's get rid of 2 employees. It's you and 1 helper from now on out, okay? And let's see what happens now to your take home. You're making the same, but now you're making $100,000 a year. Now that's pretty decent for sales of $350,000. And I'm telling you, from 15 years experience, $100,000 a year take home, plus your wages of $10 an hour, plus all the pre-tax dollar stuff you're getting, your cars and your gas for the cars and the insurance for the cars and all kinds of other stuff, meals and so forth. That's not a bad living, really. Truly, you have to wear a lot of hats, and truly, you don't get a day off and you can never be sick. But it's better than working for the man, isn't it? Well, I have many years experience doing this, but I'll have to say this: if you put it on a spreadsheet in this manner, an accountant's going to look at it and wince, and he's going to say, well, that's not proper accounting. I don't care if it's proper accounting. I want the figures to work. Usually they want the bottom line stuff at the very bottom of it, and I just put it here on the top. Doesn't make any difference. It could be freeform, just so long as all of the information is absolutely accurate, and just so long as you don't forget anything. And if you do forget anything, heck, just go right here, insert a line, add it in, and put it down as a further cost that you forgot about. And keep going. Keep adding this in there. Yes, I know you can use Quicken and QuickBooks and all of those other things, but a spreadsheet is more fluid, more flexible, and it's fast. And you can see what's going on a yearly basis, a quarterly, and a monthly basis. You need to keep enough money in your checking account so that it doesn't dip down dangerously low. You may have to keep $200,000 in your checking account because during certain times of the year it's going to drop down to $20,000-$30,000 because you're going to have lulls in sales. You're going to have lean months. You want to make darn sure that you don't have to quit paying your bills so that when you have lean months, it doesn't come unexpectedly. You're going to have enough cash flow so that in case something does happen at the business, that you can exist for, say, 9 months or a year while you make your decision of what you're going to need to do, where you're going to cut, and where you're going to have to change. My name is Pop, and I've got a whole bunch of videos on YouTube on a variety of subjects, and I hope you enjoyed this. I thank you very, very much.